This company bet over $4 billion on Bitcoin and changed corporate finance forever. They turned a struggling software company into the most talked about stock in the Bitcoin space. But did MicroStrategy, now called Strategy, earn our coveted S-tier rating? You're about to find out.
Welcome to Treasury Orange. We explore the new frontier of corporate finance, breaking down the trailblazers, building a future on a Bitcoin standard.
What's up, everybody? We are coming to you today from Treasury Orange with a full breakdown of Strategy. That's stock ticker MSTR. I'm your host, Tyler, and in the booth, we've got our producer, Christian. We're going to dive right into our analysis of Strategy, the company formerly known as MicroStrategy. For those of you veterans in the Bitcoin and Bitcoin Treasury space, they probably need no introduction. But we're going to tell you their story from the beginning, break down their financials like you've never seen before, and by the end of this episode, you'll know exactly where they rank in our comprehensive ratings. If you're new here, welcome to Treasury Orange. We are the destination for institutional-grade analysis of Bitcoin Treasury companies. Every episode, we take one company, tell their story, analyze their financials, and give you our unfiltered rating. Whether you're a retail investor trying to understand the space or an institution looking to level up your Bitcoin strategy, this is your home base. Let's start with the foundation. Before Strategy became the poster child for corporate Bitcoin adoption, they were MicroStrategy, a business intelligence and analytics software company founded way back in 1989 by Michael Saylor, with a $250,000 investment from DuPont, a software company he consulted for. For 3 decades, they built enterprise software that helped companies analyze their data and make business decisions. Think dashboards, reporting tools, mobile apps for executives, the kind of B2B software that businesses and governments rely on, but consumers never see. And for a long time, it worked. They went public in 1998, survived the dot-com crash after a settlement with the SEC over misstated earnings, and built a solid software and cloud business. Fast forward to 2020, they were generating around $500 million a year in revenue. But here's the thing. By 2020, MicroStrategy was stuck. Their revenue had been essentially flat for years. They were competing in a crowded market against giants like Oracle, Microsoft, and Salesforce. Their stock was trading at the same levels it had been for an entire decade. COVID-19 was in full effect, and it was basically illegal for Saylor to have his team in the office, and it was suddenly easy for Mag 7 companies like Google, Apple, or Microsoft to poach Strategy's best engineers by offering them better career prospects and a more lucrative contract. Then everything changed in August 2020. And I mean everything. Christian, roll that clip of Saylor talking about them sitting on cash that wasn't doing anything for them.
I'm on a melting ice cube of $500 million worth of money. The purchasing power is dwindling at 10% to 20% a year. I have to do something. And then it's becoming a question of what are you going to do?
So, Michael Saylor watched markets roil from the COVID shutdowns. He saw Bitcoin crash to $3,200 in March of 2020, then it rocketed back above $10,000 by summer. But more importantly, he watched the Federal Reserve print trillions of dollars in response to COVID, and he picked the brain of his friend, Eric Weiss. Here's Eric's recollection of how that conversation started.
He remembers me saying that anytime there's a paradigm shift like this, there's opportunity, and we just need to find the opportunity, meaning this great change with the pandemic, et cetera. And then, as I often do, I talked about Bitcoin. And instead of dismissing me this time, he said, gave me that now famous Michael Saylor look like this. And he said, tell me more about that. And I was surprised. And we spent the next, I think, probably 3 days going as deep into Bitcoin as I was capable of going. And when he was done taking all the knowledge out of my brain, he said, well, where can I learn more? And I pointed him to a bunch of resources and books, et cetera, and Twitter. He said, okay. And then we kept talking about it over the next handful of days. And yeah, then he got in a much bigger way than I anticipated.
I started actively researching. So one way Bitcoin changed me is it had me go down the rabbit hole, and I started studying Austrian economics, right? Bitcoin led me to read Murray Rothbard, A History of Economic Thought, and to read Conceived in Liberties. And then it led me to go back and reread all of world history. And then it led me into 1,000 podcasts. And pretty soon you're reading books you wouldn't expect to read. You're reading every bill about the crypto industry going through Congress. So it sucked me into the state of being a student again. And most of the time, you think once you're past the age of 20-something, you're not a student anymore. You don't need to be a student. And Bitcoin taught me that I really needed to go back and relearn everything. I needed to relearn economics. I needed to relearn politics. I needed to relearn, technology. And then that led me to go back and look at my own company again and say, maybe I need to rethink how we're going to use this.
That's Saylor describing his humility of becoming a student of economics again and learning from the Austrian critiques of mainstream economic theory. MicroStrategy holding cash was actually the risky position. With monetary inflation ratcheting way up and interest rates at zero, that $500 million on their balance sheet was guaranteed to lose purchasing power. So, on August 11 of 2020, MicroStrategy announced they had purchased 21,454 Bitcoin for $250 million, their very first purchase. The market's reaction was volatile, to put it mildly, but as Saylor says, volatility is vitality. A lot of traditional finance people thought Saylor had lost his mind. The TradFi world was baffled. Here's a boring software company suddenly becoming a Bitcoin proxy. But Saylor didn't stop there. 3 weeks later, another $175 million in Bitcoin. By December 2020, they had spent over $1 billion on Bitcoin, and the trading volume on MSTR stock was on fire. The company that had spent 30 years selling business intelligence software had pivoted to become the world's first Bitcoin treasury company, and the market started to take notice. Let's break down exactly how Strategy built their Bitcoin position, because the timing and method tells us everything about their conviction level. Starting with that first purchase in August 2020 at an average price of about $11,650 per Bitcoin. It wasn't the bottom, but it's a pretty good entry point in hindsight. Then, the acceleration began. September of 2020, another $175 million. December of 2020, $650 million more. February of 21, $1 billion as Bitcoin hit $50,000. And they kept buying through the entire 2021 bull run, even as Bitcoin ran to $69,000 a coin. Now, as a shareholder, sometimes it's really frustrating to keep seeing Strategy buying the top. But that's what makes their strategy so interesting. While most investors try to time the market, Strategy adopted what they call continuous buying. They're accumulating regardless of price because they view Bitcoin as the superior asset. It's superior to cash and not just a tradable asset.
And you've said that you didn't buy the Bitcoin to sell it, but would MicroStrategy ever take some off the table when you sense the market is at a top and then just buy in later when there's another correction? Or do you just plan to hodl through all the cycles, and weather those, whatever 80% downturns when the crypto markets are in a bear market?
Yeah, again, I just disagree with your characterization. I don't expect an 80% downturn. I don't think it's a speculative asset, and I don't think you can quote unquote take money off the table. You know, you're speaking like a crypto trader right now, right? Like, yeah, I mean, maybe you're doing it just to represent their interest, but I don't see the world that way. I think that Bitcoin is sound money. It's the technically superior asset class compared to the dollar, the euro, the peso, the bolivar, compared to a stock index, compared to gold, compared to silver, compared to everything you can conceivably buy. It is technically, thermodynamically superior as an asset. So when you say things like that to me, and maybe you just do it just to see what I'll say back, I just imagine you preaching to me in Argentina while you're asking me if I'm going to sell the dollars and buy pesos back again as the peso sleeps from 20 to the dollar to 40 to the dollar to 80 to the dollar. Or if we're in, you know, Venezuela. I mean, you think a Venezuelan company is going to, like, quote unquote, take some money off the table by selling their US stocks and their US dollars to buy back into local currencies? Or then, you know, in Zimbabwe, you think they would take money off the table, right? Like, the point is, if you have the superior asset, it's going up forever, Laura. Forever.
Right.
Now, Bitcoin did experience a 75% drawdown from the fall of 2021 to the blowup of the FTX crypto exchange, which put massive pressure on the Bitcoin price. But when Saylor said it's going up forever, Laura, he meant on larger timescales. Bitcoin is pristine capital to hold on a company balance sheet. He has positioned his company to weather downturns with intelligent leverage. As of our latest data on August 8, 2025, Strategy holds approximately 628,791 Bitcoin, acquired for a total of about $46 billion. That makes them the largest corporate holder of Bitcoin in the world, and it's not even close. Now, here's where it gets really interesting. How do you fund a multi-billion-dollar Bitcoin acquisition without destroying your balance sheet? Strategy used a three-pronged approach. First, cash reserves. They started with their existing $500 million in cash, which was straightforward. Second, convertible bonds. This is where Saylor showed his financial engineering skills. They issued multiple convertible bond offerings. $650 million in December 2020, $1.05 billion in February 2021, and several more after that. These bonds are genius from Strategy's perspective. They carry low interest rates, some as low as 0%, because bondholders get the option to convert to equity if the stock performs well. Since Strategy's stock is highly correlated with Bitcoin, rising Bitcoin prices make conversion attractive, essentially giving Strategy free money to buy more Bitcoin. These converts are for volatility junkies and shops running a carry trade, where they get attractive terms by financing these notes. They short the underlying MSTR common stock and collect a spread as the convertible note approaches the strike price. Strategy has recently indicated they will stop seeking to raise money via converts in 2025 and beyond, presumably because the terms are not as favorable as some other leverage strategies will cover. Right now, they have $8 billion of converts outstanding, but most of them are trading in the money. There will likely be little dilution to the common stock as these convert to equity, because these traders have roughly the same magnitude of short interest on their positions. The market is pretty robust though. So if MSTR need to raise some money to get volatility cranking again, they could go back to this well. Third, senior secured notes. In 2021 and 2022, they raised traditional loans in the corporate bond market at about a 6% interest rate. These loans had 3 to 7 year maturities, and only a small portion was secured by the Bitcoin on their balance sheet. Over the past 2 years, they've completely retired this kind of debt because the terms are pretty bad comparatively. They'd probably only use this method if raising money through the equity markets became difficult. Fourth, Equity raises. When their stock price soared in 2021, they raised additional capital to buy more Bitcoin with a shelf offering on their common stock. This meant they could do at-the-money selling of MSTR's equity and capture the premium that MSTR was trading to their Bitcoin assets. Right now might be a good time to sidebar and explain what MNAV is and how it relates to the Bitcoin MSTR owns. MNAV, or multiple of net asset value, is a key valuation metric used by Strategy. MNAV represents the ratio of a company's market capitalization to the market value of its Bitcoin holdings. It's an easy calculation. It's currently trading at around 1.7x MNAV, meaning MSTR is trading 70% above its total Bitcoin holdings. We'll talk more about how the MNAV is an analog for sentiment on MSTR's stock and how they intend to respond to it in the future. In October 2024, they announced a massive $21 billion ATM offering to issue new shares over the next several years. They remarkably burned right through the entire $21 billion by May of 2025. So, in typical aggressive Saylor fashion, he announced another $21 billion stock offering to be issued in the future. Now let's get back to the real crazy way they're leveraging their balance sheet to buy more Bitcoin to cater to the fixed income markets. Fifth, preferred equities. Just below Strategy's convertible bonds, you've got an ever-growing yield curve that the company is building out. When we look at all global assets, you've got over $300 trillion looking for some sort of yield on debt. Just behind the convertible notes sit those preferred equities. Instruments at the very top of the capital stack get paid out first if Strategy were to become insolvent. Common shareholders are likely to get wiped out if this were to ever happen. So you're taking off some risk by holding some of the debt instruments on top of the MSTR stack. At the pinnacle of the preferred shares is STRF. This trades as a separate ticker, STRF. This dividend-paying preferred class is a cumulative dividend that has protections in place if Strategy ever tried to stop paying it. It pays out a 10% annualized dividend every quarter based on a par share price of $100. So, if STRF was trading at $120 per share like it has recently, that's an effective 8.3% yield on capital. We expect this product to trade down closer to 7% or so once it's better digested by the market. We see it as investment-grade capital that is extremely safe relative to other dividend-preferred equities. We would give it an A rating, giving it relatively low risk and de facto securitization by all of the Bitcoin in MSTR's coffers. If they stopped paying it, STRF holders would get to put someone on the Strategy board, and the dividend would increase to 11%, then 12%, all the way up to 15% for each dividend payment they missed. Lawsuits would be flying, and it would take an all-out disaster for MSTR to miss a dividend payment on this. This instrument is attractive to someone looking for investment-grade debt because it is de facto collateralized by the tremendous amount of assets Strategy have on their balance sheet. And you can compare that to their low level of debt. Right now, they're sitting at about 11% debt to assets, which is a shockingly low amount of leverage. It's effectively 14% when you term out all the dividend payments over the next decade. So, some MSTR bears say this resembles a Ponzi scheme because they're paying a dividend to pump the common stock by buying Bitcoin. What's the argument against this for Strategy? Well, the Strategy team and we here at Treasury Orange expect Bitcoin to grow at 30 to 50% per year for the next 20 years. So if you can accumulate an asset with that kind of return while issuing interest-only debt that never has to be repaid, you make that bet every day of the week. Let's talk about the other preferred tickers from most senior to junior. STRK, or Strike, is a dividend-paying instrument that pays 8% on a $100 par share value. This is also traded up and is paying closer to an effective 7% yield. The unique part of this product is that it offers a perpetual synthetic call option on the common MSTR equity. To put it simply, 10 shares of STRK can be converted to 1 share of MSTR. Because of the $100 par value of STRK, that means it makes sense to convert the shares once MSTR is trading above $1,000 per share. If you believe in the growth story of this company, that probably seems inevitable. The perpetual nature means this product is cheap when compared to similar $1,000 call options on MSTR. Because the upside is more limited compared to a call, you can collect your dividend payments while sitting high up in the capital structure of the company if you don't have the stomach for holding all your eggs in the common stock. Up next is their newest product, STRC or Stretch. This one is crazy because its strategies attempt to cannibalize money markets and savings accounts. They IPO'd this ticker on July 29 and raised a jaw-dropping $2.5 billion to buy more Bitcoin. It pays an effective 9% yield, again on that $100 par value, and is already trading close to that. They are trying to make sure this product has a more stable price that hovers at around $100 per share perpetually. You're not exposed to price volatility, but simply have interest rate volatility. It pays an annualized dividend every month, and it will tweak the interest rate offered in 0.25% increments to keep the target price around $100. If it's trading above the target price, they'll lower the dividend, and if it's trading below, they'll look to increase the dividend. Lastly is the junk bond product that offers a little more risk, but with a theoretically higher yield. STRD, or STRD, is similar to STRF in that it has a 10% dividend on a $100 par value. Today, it's been trading in the mid-80s with an effective yield of 11.5%. The risk comes because it's junior to all the other debt on the balance sheet, and strategy can decide to forego paying the dividend at any time. That would be a misstep from our vantage point because it would weaken all of the other products that MSTR is offering. But we could see it happening if Bitcoin took a major price hit. It's really amazing to behold the intelligent leverage strategy have built up in their debt pool. The key is that their low 14% leverage ratio keeps them well capitalized, and they should be able to keep paying the dividends on the preferred equities from the hundreds of millions of dollars in cash flow they have, or by tapping the ATM on the common stock. I should add here that they have ATMs ready to go for the preferred shares as well. So when the prices or liquidity are running really high, they can tap an ATM on any of these products and raise more money to pay dividends and, crucially, buy more Bitcoin. Because MSTR is one of the most liquid stocks in the entire US stock market, because of its volatility and Bitcoin backing, they can tap their ATM pretty much at will. This brings us to the core of Strategy's investment thesis, which is more nuanced than just Bitcoin go up. Saylor articulates 3 main pillars. First, Treasury reserve asset. They view Bitcoin as digital gold, a scarce, durable store of value that is superior to cash or bonds for long-term treasury management. This is counter to the rest of Wall Street that holds on to these assets that are being debased. And that brings us to the second, an inflation hedge. With governments spending and printing money globally, Bitcoin's fixed supply of 21 million coins makes it an asymmetric bet against monetary debasement. And third, a digital transformation play. They're positioning themselves at the intersection of traditional corporate finance and the digital asset revolution. The Bitcoin innovation has proven itself as a $2 trillion market, and it's growing more liquid and more robust by the day. In 2024, Bitcoin ETFs were approved in the United States, and these products have hoovered up over $150 billion of capital. But here's what I think is the real genius of their strategy. They've created a feedback loop. As Bitcoin rises, their stock rises, which allows them to raise more capital at favorable terms to buy more Bitcoin, which increases their Bitcoin per share, which makes the stock more attractive. And because they are pioneering the space, they've gotten favorable terms to build out their capital-raising flywheel, and they've turned themselves into a powerhouse permanent capital accumulation machine. They've got a software business that becomes less and less meaningful by the minute. All right, let's get into the numbers that really matter. When you completely transform your balance sheet over 4 years, there are going to be some dramatic changes. In 2019, Strategy's balance sheet was boring. They had about $500 million in cash, minimal debt, typical software company structure. Fast forward to today, and Bitcoin represents 99% plus of their enterprise value. Their current balance sheet shows Bitcoin holdings. Those are $46 billion at cost and worth about $73 billion of value at current prices. Their total debt is $14.5 billion. $3.2 billion of those convertible bonds are already trading in the money, with another $2 billion of convertible bonds trading just 8% out of the money. The last $3 billion in converts aren't in the money until MSTR trades up to $672 per share. Given that it's been trading in the $400 per share area recently, that one has quite a ways to go. It does have a 0% interest rate and would need to be refinanced by the end of 2029. MSTR usually trades more than $3 billion of volume in a single trading day, so they could easily refinance that in a bull market. Things obviously get trickier when Bitcoin and MSTR are trending down. Their current debt coverage ratio is 7x. Strategy has dubbed this as their BTC rating. It simply means that the value of their Bitcoin is 7 times the value of their debt. They could theoretically sell 14% of their Bitcoin and pay off all of their debt. Compare this to traditional leveraged companies that might have 1.5x or 2x debt coverage ratios, and you can see why Saylor feels comfortable with this structure. Now, the income statement is where things get messy, and this is crucial to understanding what you're really investing in. Strategy's software business still generates around $500 million in annual revenue. They've got healthy margins, nothing spectacular, but stable and profitable. Their operational income covers their debt service comfortably. But then you have the Bitcoin accounting effects. Under recent accounting rule changes in January 2025, they mark the Bitcoin to market prices at the close of every quarter. This creates massive earnings volatility when Bitcoin is its usual volatile self in US dollar terms. This means their reported earnings have become far more meaningful. They used to have to mark down losses as earnings impairments, and they still have to account for those losses, but now they get to realize their Bitcoin gains in their earnings. That has led to one of the biggest catalysts for MSTR's price appreciation potential, S&P 500 inclusion.
Stay tuned this Friday for the conclusion and ratings breakdown of Strategy. In the meantime, stay orange, stay informed, and we'll see you in part 2.